with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. China's central bank has announced the cuts in reserve requirement ratio and policy rates and lowered the interest rates on personal housing provident fund loans. The measures are part of China's new financial incentives to stabilize the economy. The People's Bank of China also unveiled supportive policies for scientific innovation and expanding consumption. Regulators in the financial sector and stock market vowed to inject more certainty into the economy and help small and private businesses through difficulties. Our Sun Tianyuan has the details.
Chinese officials are rolling out new financial measures to help stabilize market expectations as global uncertainty grows. Authorities say China's key financial indicators have stayed strong this year despite challenges. The economy has shown great resilience and the ability to handle risks. China's central bank said it will cut the reserve requirement by 0.5 percentage points, and this move is expected to provide 1 trillion yuan in long-term liquidity into the market. That's about $138 billion. Policies to support tech innovation and small businesses were also a major focus. For example, the central bank will raise the special loan quota for tech upgrades from 500 billion yuan to 800 billion yuan. The National Financial Regulatory Administration also announced new steps to boost financing and investment for small firms, private businesses, and tech-driven companies. Despite complex global trade conditions, officials say China remains on track for high-quality growth. They emphasize more stable and predictable macro policies. The China Securities Regulatory Commission said it will offer more flexible rules for listed companies heavily affected by tariffs, especially in financing, to help ease their difficulties. Strong support is on the way through both policy and funding. Officials say more measures are coming to keep growth on a steady, high-quality path.
And that was Sun Tianyuan reporting. So what will be the impacts of these policies? What is China's economic strategy among the global uncertainties? And how will the country move forward? For more on this, join us on the line now are Li Lun, Assistant Professor of Economics, Peking University, Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. So I will start with you. We know that China's central bank will cut the reserve requirement ratio by 0.5 percentage points, releasing about 1 trillion yuan in long-term liquidity, and also lower the policy interest rate by 0.1 percentage points. So what do you think is the potential impact will this have on China's economy and the financial markets in the coming months?
Well, I think these policies provide liquidity support for the broader economy, and so it will have positive impact. Although I would say, though, that China's bank lending or the total social financing has been pretty solid. When you look at the first quarter data, the total social financing reached 423 trillion yuan, which is basically 8.4% growth year on year. So in other words, I think in terms of bank lending, in terms of the total social financing, it has already at a very solid pace to start with. But I still think that, this monetary easing and financial support, and we can talk more about it, they also not only just provide this general liquidity support for the broader economy, but they also help to target very specific sectors that are either vulnerable or they're very important and strategic for the economy. So I think, the broader sets of policies are still very, very helpful. And also, I think, this policy complements well with the earlier fiscal package and the NDRC's employment stabilization policies and other policies. So I think, these policy coordinations would really help to amplify the positive effect of all these different policies. And finally, I think, this announcement came at a really good timing, as we know that the first quarter growth of the economy is very solid. But I think the negative shock is going to come in more likely from the second quarter on. So this provides some preemptive cushion against the kinds of external shock. Not to mention, I think the time is right. The RMB value has held up very well in the recent weeks. So I think that gives a little bit more reassurance for central bankers to cut rates, not to worry too much about currency depreciation. So I think, these policy moves are important at the substantive level.
So, Professor Qu Qiang, what do you think is the significance of these policies?
And I think they send the signal and expectation is very important for the long-term development of Chinese economy. It released a certain amount of liquidity into the market, like 1 trillion yuan. And also, even though there's only 10 BP cut in the LPR, but still it can help the financial institutions lower their borrowing cost and also to balance their spread in the lendings. And also for the real economy, a very strong signal for ample liquidity so that the stability and confidence in the financial market can be maintained.
And so, Professor Qu Qiang, so China plans to raise its funding for tech innovation by 300 billion yuan, pushing the total financing to 800 billion yuan. So how significant is this in accelerating China's technological self-reliance among the current trade or tariff tensions?
Yes, I think this is actually a very important move with long-term vision. A lot of people probably get misunderstanding about the tariff conflicts. About, the most hurting part is everything, the groceries, the daily part, the supplies were getting more expensive. Well, that's true, but not the worst part. Actually, the worst part for a nation during the trade conflicts is actually happening with a high-tech part, not like 60 years ago. If two countries are between, the trade conflicts, basically the raw materials will become the most important choke points. It's like I will stop the shipment of the natural gas or oil or coal to your country, and then your economy is going to collapse. Well, this is not the case anymore after 60 years, because with the Belt and Road Initiative and with green energy, this probably won't be the worst part. And also for the supplies of the daily groceries, I think the supply flexibility is really large. For example, if America, try to, put the very high tariff on Chinese toys, the consumers will hurt for a little while, but the importer will find the substitute from Mexico immediately, because everybody can produce the same thing. And same thing like when China blocked Americans' soybean with very high tax, and then China will find a substitute from Brazil. So it's very easy actually in a current globalization, but the thing is very hard is about the high technology products. So for example, like semiconductors, or some other high-tech products like, high-tech or DNA-oriented pharmaceuticals. If, during the trade conflicts, one supply has been ended or getting very expensive, basically you have no choices to find some other substitute because it's really rare. Not so many countries can produce it very easily. So I think that's the reason why our leadership understand it more than ever. Before, we need to have the resilience and independence of our own innovation capabilities. And we have to nurture more of the creators, innovators, on our soil. That's the reason why we, doubled our bet on the tech-savvy companies, small SMEs and all of the startups. And also, you have to understand the nature of this kind of technology startups. They are usually very, very small, in the beginning. And they come in like in a mushrooming kind of a gesture. So many of them just trying to mushroom from the soil, and they need help. They do not have so many assets for the collateral. They cannot borrow much of the money from the bank, and their interest rates are always high because they do not have the credit. So that's when the government needs to step in, help them to lower the burden, borrow the money, and to give them, all kinds of support. Then when, one or two of them grow, up and out of 100 of similar counterparts, and then they will probably dominate the whole market, just like the Unitree, just like the DeepSeek. They are just that kind of example. So I think this is actually very, very necessary and important things for us to do, in not only now, but also in the next 10 years or even 20 years.
And Li Lun, actually, as Professor Qu Qiang mentioned, China is prioritizing the high-quality development as well as the technological and industrial innovation. And there is a new law which will incentivize the private companies to take a leading role in science and technology development. So what kind of impact is that going to have?
So the law you mentioned is passed in late April, which elevates support for private industries in China. And a very well-known figure about private industries is that they contribute for 60% of GDP, 70% of innovation, and 80% of all urban jobs. So they're a crucial part of the economy, and it's very important to have this role to kind of support the private industries. So this law really gives them the equal market access. Also, it gives them higher access to credit lines. And the other thing is that we can also, through innovation and through investment in these private companies, to create new consumer products, which is also for exporting to countries outside of America, for example, ASEAN countries or European countries. So these will create both a very healthy inner circulation, also a circulation around, for example, the ASEAN countries or Belt and Road countries.
And so, Yan, the foreign trade for China stabilized in the first quarter of this year. And looking at the numbers, the total imports and exports reaching over $1.4 trillion. And last year, the foreign trade reached the $6 trillion US dollars. But we have the US tariffs now. So how are those tariffs going to impact China's trade performance? And what could Chinese enterprises do to offset the US tariff impact?
Well, so yes, the tariff rate is prohibitively high at 145%. And the US is still accounting for about 14.6% of China's exports. So I think the impact will be quite significant. But that said, I think on the one hand, we have seen the US started to, in a way, chipped away some of these tariffs. For example, the electronics exports from China to the United States have been exempted. And so that means, the iPhones, laptops, and some other consumer electronics are not going to be subject to that 145% of tariff. That, I think, amounts to close to $100 billion of China's exports. So that part is gone. And we also learned most recently that big retailers like Walmart, Home Depot, Target, and so on have been talking to Trump and trying to, again, carve out their markets from the tariffs. And I think that it has been reported that Walmart has been telling their Chinese suppliers to continue to produce for Walmart, to fulfill the orders for Walmart. So I think there are some of these exemptions, some carve-outs that would help to reduce the impacts. Also, I think, of course, China has been looking for other export partners to explore more markets, in Southeast Asia, in Latin America, in Africa, and in Middle East. And so I think by diversifying the export destination, I think that would also help to cushion against the shocks. Now, of course, I think the most important measure is to try to foster, domestic demand and try to boost the consumption demand. So we know that, big e-commerce like JD.com, they already, rolled out some funds, 26 billion yuan, to allow the products that used to be exported out now to be sold at the domestic market. So I think these will help to reduce some of these impacts on the tariffs. We also know this joint press that we're talking about have taken some measures also to help the exporters. For example, the government would ensure that banks and insurance companies will increase their support for the exporters to make their export their operations more supported and easier. So this would help to provide, broader access to financing for these exporters. It will give them faster loan approvals and also tailored services to help these firms to, sell their products now to the domestic market. Because we know a lot of times the export markets have different sets of regulations and standards. And now if the products needs to be so at domestic market, they need to change some of their standards and regulations to be compatible. So I think all of these supportive measures will help with these exporters. And also I think many of the manufacturers are also getting the support to be able to invest abroad. And so I think that would also help to build some of the local supply chains to avert the US tariffs. So I think, with all these whole lists of policy measures, both trying to explore overseas markets, overseas supply chains, and also pivot towards domestic sales, I think this will really help to cushion the external shocks.
And Professor Qu Qiang, so China is to stimulate the domestic consumption as well as reduce reliance on foreign markets. And China has adopted this dual circulation strategy. So how will that work?
Well, I think we're doing it just fine. Well, just a little bit of correction. We're not trying to reduce our reliance on the outside world. Actually, China's opening up is actually wider and wider and further and further. Just take a look at the the agreement and the contract that we've been signing up on the Canton Fair just ended, just a few weeks ago. And also just take a look at Shanghai Expo. We're trying to import lots of very high quality and diversified products from our trade partners, especially from the global South nations and the Belt and Road trading partners. This is our strategy. We'll never change. What we're trying to, prevent or be very cautious about is some, foul trading partners. They are trying to, forge or impose some, very unreasonable, ridiculous tariff on China, and accusing China has been, profiting from it. Well, profiting is, getting profit from the trade is what we do bilaterally, from the trade, right? So what's wrong about doing trade and finding what we need from the trade respectively? So I think this is just a very unreasonable understanding about the nature of trade. So for China's side, yes, double circulation is very, very important. I think double circulation is not just to prevent the risks, but also trying to develop our whole economy and to serve the whole world growth even better. China have more than 400 million growing in a middle income class, and this number is still increasing. And we have 1.4 billion of effective consumers. This is very, very phenomenal, because if you plus North America with European Union together, you only get less than 1 billion population. So I think China have a very, very great potential to grow into, I think, the second largest or even the number one largest market of the whole world. And by that day, I think it's going to be a great news by all the producers, the suppliers of the whole world. And if you're counted in like ASEAN nations and all the Far Eastern Asia, that probably is going to be bigger. So I think previously we focused so much on investment and production. Now I think it's a turn, after accumulating all kinds of the technology, services, experiences, and capital. I think China now have all these resources to grow itself into a very large market to contribute back to the world market. That's the reason why we started the double circulation, strategy. But meanwhile, it doesn't mean we're going to abandon manufacturing. We're not going to do that. We're still going to climb up the value chain, make our economy more modernized and optimized, and then we will serve the world with our best quality products, high technology, and to support our global South partners to grow together, to achieve modernization together, and increase people's livelihood together, to forge this community of the shared fate, shared future for all human beings. And meanwhile, we will buy more things to improve our own people's quality of life, and also to increase our domestic consumption.
And Yan, so China is trying to boost consumption and other very important services like, elderly care and child care and so on. So could you elaborate more on that, and how could all this help the economy?
Right. So going back to what Professor Qu talked about, this dual circulation, right? It means we wanted to have the external engagements, import and export, but we also wanted to cultivate domestic market, especially consumption demand, because I think, rising consumption demand is a means to boosting domestic demand and driving economic growth, but it's also an end to itself, because with more high quality consumption, it's a way to increase or enhance the living standards and well-being of the Chinese people. So I think the way to grow domestic market and boost domestic consumption at this point, there are many measures that could be helpful. So for one is, boosting people's income. And I think, the earlier announced fiscal packages has some items that will help to, for example, increase pension payouts, increase, income subsidies to the low income families and so on and so forth. And so that helped to boost income. But otherwise, I think, the Chinese people actually have a lot of savings, right? We know that the disposable income in China in the past 20 years grew pretty much on par with GDP growth. So we're talking about average, 6% growth on domestic, on the disposable income. And, households are having a lot of savings to the tune of $22.2 trillion worth of bank deposits now in the Chinese banking system. So how to mobilize these savings, encourage more spending and less precautionary saving, I think is a lot of these measures now are focusing on, which is how to encourage people to, to spend more, to have the confidence to spend and have the willingness to spend. So one of the reasons that many people save rather than spend is because they wanted to provide for themselves in terms of their, rainy day funds. They wanted to save up for retirements, for healthcare, for educations for their children. So I think the policies that are being announced at the joint press has some measures that would help to reduce the kinds of precautionary savings. So, for example, the central bank would set up the re-lending facilities to help to subsidize elderly care and some of the services consumption. So, in other words, the central bank is going to set up these facilities and lend at very low rate to commercial banks, and these banks would on lend to the service providers, to elderly care facilities, and so on and so forth. So that would help to subsidize, these essential services. And so that would reduce the kinds of precautionary saving and allow consumers to be able and to be willing to spend more. Not to mention, I think this service consumption itself is also very important. China's consumption of services is only about half of the GDP. Whereas in the advanced economies, that number is much higher, right? 80% of their consumption. So I think, there's just a lot of room to bolster domestic consumption demand. And some of these policy measures are precisely doing this by giving people the income to be able to spend, to ease, their precautionary propensity to save, and also to, cultivate new kinds of consumption products, right? Be it goods or services, and also to have a healthy environment. So then the consumers know, the product they're buying are high quality, are reliable. And so all of these, I think, are, again, holistic approach to boosting domestic consumption demand.
And Li Lun, so talking about consumption, we've seen the Chinese travelers took estimated 314 million domestic trips during the just concluded Labor Day holiday. And this figure represents a 6.4% increase from last year. So what are the main factors driving this continuously, surge in domestic tourism?
Yeah, so some of the patterns that I noticed is that people are going more and more to the niche travel destinations. So not, the most popular places of interest like Beijing or Shanghai, but rather, smaller cities that they have never been before, or cities that doesn't attract so much traffic before. So I think all of these reflects a higher demand for consumer experience, right? So they don't want to just to join the crowd and see the places of interest. They want to actually spend some time in the city and enjoy the local food, stay at a better hotel and actually interact with the local residents and so on. So I think these reflect a better demand, a higher demand for quality instead of quantity, right? So also I think these reflect a higher willingness to spend on things that echoes with their experiences. I think part of the importance of domestic tourism is that with the prevalence of e-commerce platforms and social media, many times when people travel, they get to know local merchants. For example, you go to a store that you find very interesting. You could add their social media and continue the purchase after you return to your city. So I think this also kind of will have a continued impact on local demand and local consumption as well.
And Professor Qu Qiang, so China's commitment to reform and opening up continues to attract foreign investors. And in the first quarter of this year, the number of newly established foreign invested enterprises increased by 4.3% to over 12,000. And there was a survey, done by the American Chamber of Commerce in South China. It revealed that 58% of foreign companies still consider China as one of their three top global investment destinations. So how important is that for China?
Well, I think we always welcome the foreign capitals to invest in China and to share the growth, result of China together. I think this is very important. And also for foreign investors, this is also very, very important. We have to point it out. China has grown itself into more and more a stabilizer of the whole world economy and a very, very stable growth, a provider for the world economy. You can see every time when, a major economy has some turbulence in the economy, like 2008, like European Union debt crisis back in, 2011 to 14, China will always become, stabilizer. You will see renminbis rising up in the foreign exchange rate. You will see the, assets prices rising up, or the foreign capitals, inbounded into China are growing very rapidly. And this trend is continuing by now. So China, well, we are very proud to say, and China has become a very important pillar to support, the world economy. And also, I think more than that is China is not only try to do it by itself, but also try to support a network of global South nations together with ASEAN nations, with Latin America, with Africa countries. So this team of stabilization, this team of potential growth has been growing up bigger and bigger. So I think that's eventually a great news for everybody.
Well, we're speaking with Professor Qu Qiang from Minzu University of China, Li Lun, Assistant Professor of Economics, Peking University, and also Yan Liang, Professor of Economics, Willamette University. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.